I'm Indra Ban, Interim CEO and Chief Operating Officer of the Surrey Board of Trade, and also the Acting ED for South Surrey White Rock Chamber. So I'm sure most of you have already heard about this, but the Chamber and the Board of Trade, we are merging to become the Surrey and White Rock Board of Trade. It's going to be big. We're going to be one of the largest in BC, so we're very excited about that. We have submitted applications to the federal government and are awaiting their approval, which we hope to receive by spring. So as soon as we have the approval, we'll do some sort of a launching, and we will be merging the two, the Board of Trade and the Chamber, and working together. So we are all very excited about it, and I'm sure all of our members are also very excited about it. I acknowledge that we are on the traditional territory of the Coast Salish people, specifically the Kwantlen, Katzie, Coquitlam, Kakite, Semiahmoo, and the Tuasan First Nations. As well, I acknowledge the Inuit and Métis Nations peoples who live and work on these territories. Surrey is the fastest growing city in Canada and will soon be the largest city in BC. With the largest industrial land base in the region, businesses from near and far are looking at Surrey as doing this choice of business. If you are not a member of the Surrey Board of Trade or the South Surrey White Rock Chamber, please talk to the staff in the room. We have great benefits for you. So let us know, and there's Kapil in the room and there's Rona in the room. If you're interested in joining, if you're not a member, let us know. Today's session is hosted by the BC Securities Commission. They will provide valuable insights and strategies to successfully raise capital for your business. You'll have the opportunity to network with others in the room as well and learn from industry experts. I'd now like to introduce Victoria Steeves, Senior Legal Counsel from BC Securities Commission, to begin this session. Thank you, Victoria.
Good morning. Thank you. Thank you for being here, and thank you for welcoming us this morning. We're excited to be here today to present to the Surrey and White Rock business communities. At the BC Securities Commission, we know how important it is to support businesses' growth and development with capital raising. Our goal today is to help you better understand how your business can raise capital here in BC. Our presentation today will cover some basic concepts of securities laws and provide detailed information about prospectus exemptions that are available to small businesses as they grow from startups to medium-sized businesses. I'd like to introduce my colleagues, Ken Chow and Ian Fong, who'll be presenting to you today and tell you a little about their background. Ian works as legal counsel in our corporate finance group at the BC Securities Commission. Ian holds a finance degree and a law degree, both from the University of Alberta. During law school, Ian co-authored a paper on securities regulation of cryptocurrencies. At the BCSC, Ian is involved with our mining group and is also a part of our financial innovation and technology team, where he's involved with a broad spectrum of fintech matters. My colleague Ken works as senior legal counsel in our corporate finance group. Ken holds a degree from UBC Law School and a Master's of Laws degrees in corporate finance from the University of Hong Kong. In his role at the Commission with us, Ken develops legislation and policy, answers inquiries from the public related to prospectus exemptions, and provides recommendations on complex and novel applications for relief from our rules. I'm going to turn it over now to Ken and Ian to give you some information on capital raising for small businesses. We'll have time at the end of the presentation for questions, but if you have any questions during the presentation, please feel free to jump in. Thank you.
Thanks, Victoria. Hello, everyone, and good morning. My name is Ken, and I'm Senior Legal Counsel at the BCSC. As part of the team of lawyers here, we like to keep an eye on issues for small business. One piece of advice on how to grow a business seems particularly relevant to today's talk. It comes from Anthony Lacavera, who has founded about a dozen Canadian startups. In regard to raising capital, he suggests entrepreneurs spend at least one day a week cultivating relationships with investors. He says it doesn't matter how good your technology or your team is. If you have no capital, someone with technology or a team that's not as good, who has capital, will beat you 10 times out of 10. Lacavera went on to say, we succeeded not because I'm a great salesperson or had unbelievable business. It's because I was able to raise capital. Now, I'll pass the mic to my colleague Ian.
Thanks, Ken. Picking up where Ken left off about the BCSC, it's also helpful to understand that the BCSC does not only regulate stock exchanges, public companies, registered dealers, or advisors. We also regulate all aspects of trading and issuing securities, even by the smallest companies. So some of the things that we're going to cover today are what is a security, when the securities law apply, and how does your small business raise money while complying with securities law. The one thing I want to highlight about this presentation is that we will only focus on securities law. It is also important to know that corporate law would also apply to your small business. One other point I would like to raise, is that we will be talking only about BC securities law. In addition to laws in BC, you will also need to comply with the laws in each jurisdiction where your investors or potential investors reside. We try very hard to harmonize the provincial laws across Canada, but there are some differences that you should be aware of, particularly with the offering memorandum exemption. So if you have potential investors in other provinces, keep in mind that you will want to consult with your legal counsel or the securities regulator in that jurisdiction to identify any differences. So let's start things off by answering the question, what is a security? The term security is very broad that is defined in our securities legislation. It includes any document or agreement that allows the holder to profit from the efforts of others or represents an interest in a company or other organized entity. The most common example that you will think of is a share or a stock of a company. But the definition of security is much broader than just shares or stocks. It includes things like stock options, warrants, bonds, promissory notes, debentures, and other types of debt. Recently, we've been asked to consider whether some crypto assets, such as blockchain tokens, are securities. And in those cases, it really depends on the facts and circumstances, which makes my job quite hard. The key message here is that just because something isn't called a share doesn't mean it's a security. So there's a myth that securities law only applies to companies listed on the stock exchange or big companies like TELUS and large banks like RBC or TD. But in reality, it doesn't really matter if your company is big or small, listed on a stock exchange, securities law will apply to any company. And it doesn't just any companies. Securities laws also apply to limited partnerships, trusts, and even individuals. The key takeaway here is that securities law will certainly apply to your small business. Unfortunately, many people misunderstand this concept. They think that they can operate outside of our securities rules just because they're not a public company. This misunderstanding can lead to unintentional non-compliance with securities law. Many of the hearings in front of our commission relate to companies or individuals that have raised money privately and have either ignored or been unaware of our securities law. So to answer the question, when does a small business have to consider securities law? It's anytime. Anytime a security is being issued by a company. Although this concept may sound pretty onerous, this presentation is meant to help you understand how securities law applies to your business and how to comply with them. So starting with very basic concepts, there are two key principles of securities law. One is the registration principle. Most trades of securities must be made through a registered dealer. This helps ensure that securities are sold by qualified people who have the duty to know their clients and ensure that the investment is suitable for them. And it's important to know that there's a range of different types of dealers. There are big bank-owned dealers like BMO, discount online brokers like Questrade or Wealthsimple, and crowdfunding portals like FundFunder. As a regulator, we only require someone to be registered if they're in the business of trading. The BCSC has guidance on whether a person is in the business of trading, but for today's purposes, we assume that most of your small businesses aren't in the business of trading. So we'll put aside the registration principle for today. The second key principle and the principle that we will focus on today is the prospectus requirement. Generally speaking, a person cannot distribute securities unless a prospectus has been filed, reviewed, and receipted by the Securities Commission. And you might be wondering, what is a prospectus? Well, a prospectus is a comprehensive document that provides information about the company, its business, and the securities being offered. Information in a prospectus includes details about the company's management and business, a comprehensive list of risk factors, 2 or 3 years of audited financial statements, and the list goes on. What you should know is that it is very expensive to prepare a prospectus because of the team that needs to be involved. Preparing a prospectus involves the company, an underwriter, the company's auditors, 2 sets of legal counsel, and many others. For example, a professional might need to write a technical report for a mining project. So why such a big team, you might ask? Well, the company and the rest of the team may carry liability if the prospectus contains a misrepresentation. Prospectuses must be filed and reviewed by the BCSC before the securities can be distributed. Once a company files a prospectus, it will become a reporting issuer and will have to file annual and quarterly financial statements and many other continuous disclosure documents. So I understand there's a lot of information to digest right there, but the key takeaway is, generally, when there's a distribution of securities, you require a receipted prospectus. However, there are exemptions to which we will touch on shortly. So why? Why is a prospectus needed? The prospectus requirement is meant to address the issue of imbalanced disclosure or information asymmetry. And why is it called information asymmetry? Think of like a seesaw where one side has more information than the other side. So what does this look like? A company and its directors will have better access to information about a company's business than would the general investing public. This difference in information is commonly known as information asymmetry. Information asymmetry puts investors at risk because they won't have access to information that would help them make an informed investment decision. Requiring a company to file a prospectus helps alleviate this risk because a prospectus provides the public with material information about the company, allowing the investors to make an informed investment decision. So, throughout our presentation, we will be referring to a fictional small business called Vike Coffee. And in case anyone's wondering, Vike stands for Victoria, Ian, Ken, and Elliot, who are the members at the BCSC that work on prospectus exemptions. So in our example, we have Arvin, who's an entrepreneur, and he wants to open a coffee shop in the Surrey Memorial Hospital. Arvin has incorporated a business name named Vike Coffee Company. So in our example, Vike will follow the traditional growth model that many startups experience. As you can see, oh, there's no laser. It starts with the early stage, growth stage, and expansion stage. And Arvin plans to scale up his business using the capital raised from exemptions. We want to emphasize that these principles can be applied to all types of industry, not just coffee. In the early stage of his business, Arvin needs to find a way to raise capital to start up his business and build some infrastructure. Specifically, he would need capital to purchase coffee equipment like an espresso machine, inventory like coffee beans, and a lease space in the Surrey Memorial Hospital. In the growth stage, Arvind might want to hire more staff and shift his focus to roasting beans in-house. And at the expansion stage, he wants to open an online store for his beans and shift his focus on distributing the beans to more people. For these next two steps, Vike will need to raise money, which we will touch on later. So, back to the early stage. Vike has two potential investors, Arvind's mom, Pavan, who is willing to provide a loan of $40,000 in exchange for a promise in writing that she will be repaid in the future. This is called a promissory note. And as you might recall, a promissory note is a type of security. And from my experience in private practice not so long ago, I saw a lot of non-compliance when it came to reporting the distributions of promissory notes. So just keep that in mind. The second potential investor is Arvind's sister, Nisha. And she wants to invest another $40,000, but instead she will receive a share of the company. The question I want everyone to keep in the back of their mind is that, can Arvind raise money from his mother, Pavan, and his sister, Nisha? The following slides will help answer that question. So, back to the topic of prospectuses. We often hear people talk about private companies and public companies, which aren't really real terms in Canadian securities law. For this presentation, we will focus on companies that are just starting up and need to raise capital without having to prepare a prospectus. And the way they do that is through prospectus exemptions or exceptions to the prospectus requirement. And as the name might suggest, these exemptions will allow small businesses to raise capital without having to prepare such a detailed document like a prospectus. So tying all of this back to you guys, your small business is probably able to raise money without filing prospectus and relying on a prospectus exemption. And the primary exemption that most small businesses need to know about is the private issuer exemption. You will generally qualify for the private issuer exemption if you have less than 50 shareholders. Being a private issuer has two main advantages. There's an exemption for the prospectus requirement, and there is no need to report your sales of securities to us. However, if you have more than 50 people holding your securities, you can no longer be considered a private issuer. You will need to find another exemption, and you will generally have to report the sales of securities to us, depending on the exemption that you use. In other words, the private issuer exemption is the only type of exemption, is only one type of exemption under the umbrella of exemptions. So if you're ever in doubt, remember this little rhyme that helped me pass securities law. Nifty under 50, and if you're over 50, look to the book. And the book being securities regulations. So how does this 50 security holder limit affect Arvind and his business? Since Vike only has a couple of securities holders right now, they qualify as a private issuer, and most small businesses are private issuers. So we just spent a lot of time explaining that you don't need to report your sales of securities when you're a private issuer. But what exactly is this requirement to report? Generally, when an issuer sells securities under most prospectus exemptions, and again, other than the private issuer exemption, the issuer is required to report the sale of those securities to us. This report is made on a specific form called the Report of Exempt Distribution. And there are a lot of details that go about what goes into this report, and you can find this information on our website, but just keep in mind two things. The report must be filed with us shortly after the sale of securities, generally 10 days after the sale, and there are fees associated with the report. So once a company loses its status of private issuer, it cannot regain that status except in limited circumstances. The main point here is that it is important to keep track of your security holders and ensure that you sell securities to only groups listed in the exemption to remain a private issuer. So now that we know most businesses can rely on private issuer exemption, another important question to ask is, can a private issuer raise money from anyone? The answer is no. Without preparing prospectus or an offering memorandum, a private issuer is generally limited to selling securities to certain groups. They are the company's employees, directors, or executives, close family members, friends and business associates of the company's directors and executives, and accredited investors. We will describe each of these categories in more detail over the next few slides. So let's turn back to my initial question. When Vike sold coffee to Arvin's mom and sister, did they meet the exemption requirement? So yeah, those individuals fit within our definition of close family members, so those sales are fine. The exemption defines a close family member to be a spouse, parent, grandparent, brother, sister, child, or grandchild of a director or executive of the company. Examples of people who are not close family members are aunts, uncles, and cousins, but they might qualify under other categories. So under the employee, director, or officer exemption, current employees do not count towards the 50-person private issuer limit. However, if an employee leaves the company, they would count towards that limit. So back to our example. Vike is currently in the growth stage, and they had a successful grand opening and became a trendy spot for doctors in the Memorial Hospital. Customers are also traveling out of their way to the hospital to buy their coffee. Arvin is now looking to expand by hiring 2 baristas to serve coffee, and so that he can begin roasting beans in-house. This means that Vike will need more money, about up to $200,000 to buy a roasting machine. His mom and sister want to invest again, but 3 other people are interested as well. Arvin's cousin Anmal, who grew up together, and they were running each other out in and out of each other's houses when they were kids, and they still continue to keep in touch. There's Indra, a general surgeon at the hospital and a regular customer at Vike. She always makes time to chat with Arvin, and Arvin always remembers her favorite drink. Indra is also interested in being an investor. And the third potential investor is Arvin's soccer acquaintance, Derek. Although Arvin hasn't seen or talked to Derek in a few years, he feels like he knows him fairly well because he sees Derek's soccer photos on Instagram and Facebook. So let's see if Vike can sell securities to Anmal, his cousin, Indra, the general surgeon, and Derek, the soccer friend. So as we mentioned earlier, a private issuer can sell securities to close personal friends of its directors and executive officers. Issuers that are not private issuers are also able to sell to close personal friends. However, they must file that form that we talked about earlier. So what do we mean by close personal friend? This can be quite difficult to define, as it can mean different things to different people. And especially when social media is involved, it might contribute to the confusion. For example, Facebook uses the term friend, which can imply closeness, that may not be supported by the facts. But for the purposes of this exemption, a close personal friend is someone you know well enough and long enough to be able to assess your capabilities and whether they can trust you. This is important because calling a person a friend only because they have money to invest in your company can get you in trouble by our buddies in enforcement. So a coworker or someone you have friended on Facebook or know only through a neighbor or spouse likely won't qualify as a close personal friend. So tying all of this back to the issue of information asymmetry, the investor does not need to access a prospectus because they have a close enough relationship to the issuer or the company to assess their trustworthiness. So turning our minds back to Derek, the potential investor, he would not be a close personal friend if being a Facebook or Instagram is the sole basis of the relationship. However, it sounds like Arvin's cousin Anmal would meet the definition of close personal friend since they grew up together and continue to keep in touch. And because Anmal is Arvin's cousin, you might think that Anmal would fit under the family member category. But remember, that category does not include aunts, uncles, cousins, nieces, nephews. It's a very specific list, but any relative that you have a close relationship with may also meet the close personal friend test. However, if Anmal has his own friends who are interested in investing, they would not qualify unless they also have a close relationship with Arvin. The relationship must be direct. and the exemption is not available to close personal friends of a close personal friend. And now I'm going to turn the floor to Ken, who will carry us the rest of the way.
Thanks, Ian. Similar to the concept of close personal friend, a close business associate is someone who has had enough business dealings with the director of a small business to assess the capabilities and trustworthiness. This generally does not include a client or former client, or again, someone you principally interact with on social media sites like LinkedIn. And as with close personal friends, this relationship must be direct. Back to the Vike coffee example. As Ian indicated, Indra buys coffee from Arvind every day and has built a good relationship. Would Indra be considered a close personal associate because she technically does business with Arvind every day? Well, not quite. Indra would not be able to assess the capabilities and trustworthiness of Arvind's business just from buying products. However, Indra would meet the accredited investor exemption, which we will touch on the next slide. People that would qualify as a close business associate, for example, would be Arvind's inventory supplier. One good thing to keep in mind for use of this and any other exemption is that you need to take reasonable steps to verify that the person meets the conditions of the exemption. If your close personal friend is buying securities, we recommend that you have them sign a purchase agreement that sets out the nature and length of the relationship and who they have it with. Hopefully, you've recognized a bit of a theme among these individuals who are able to invest in Vite Coffee. They all seem to have some strong pre-existing relationship with the founder of the company, Arvind. The last key category of individuals that a private issuer can sell securities to is someone who qualifies as an accredited investor. The idea behind this concept is that certain individuals or institutions do not necessarily require all the protections of our security rules. Reasons for this include that certain individuals have a healthy income, like Indra, or assets, and may be better to assume the risk of their investment, or because certain large institutions employ people who have expertise in making investment decisions. Some examples of accredited investors are institutions such as banks, pension plans, or investment funds, large corporations, or high net worth individuals who meet specific income and asset tests. Warren Buffett, pictured here, is definitely an accredited investor, but a person doesn't have to have Warren Buffett's net worth to qualify as an accredited investor. The term accredited investor includes any one of the following individuals: an individual who makes more than $200,000 a year or $300,000 combined with the spouse. Either alone or with a spouse has at least $1 million in net financial assets. The term net financial assets means cash or securities and does not include real estate. Either alone or with a spouse has at least $5 million in net assets. Net assets, unlike financial assets, can include real estate, less liabilities such as a mortgage. It also helps to address information imbalance. Accredited investors are in a better position to ask for more information, as well as better suited at managing risk, which alleviates concerns for information imbalance. Arvind has another cousin who is quite wealthy. She has more than $1 million in her bank account. Would she be able to invest as an accredited investor? Yes, she would. Here's another question. Arvind has a relative who was a retired widower who owns his home and has savings of $300,000. The home has been assessed value of $1.4 million. Would he be an accredited investor? Based on these facts, the answer is no. He is retired and we don't know his income, and he doesn't have enough in savings, and his real estate wouldn't count. Financial assets are cash and securities, not real estate, and he doesn't have enough to meet the $5 million net asset test. So like With the close personal friend, close business associate categories, you need to take reasonable steps to verify that the purchaser actually meets the characteristics required under the exemption. For the accredited investor category, you should be getting written representations from the investor. For example, in a written agreement from the purchaser, also known as a subscription agreement, that sets out how the person meets the accredited investor test. Vike is now a staple for coffee in Surrey, and his in-house roasted beans have more demand than he expected. Multiple cafes in Surrey and Burnaby want Vike to be their main supplier of coffee beans. Considering the success of his specialty beans, Arvind wants to pivot and scale up Vike's roasting business to an e-commerce model to be able to sell his beans across Canada and the US. To keep up with the demand of his beans, Arvind will need to open a warehouse and multiple roasting machines to roast and distribute his beans. He also plans to sponsor the 2025 Canadian National Brewers Cup, the national brewing competition. In order to do this, Arvind needs $2.5 million in capital. Arvind has gone back to all of his close family members and close friends, and also all of the accredited investors they know, including Arvind's distant cousin, but have not been able to raise $2.5 million that he needs. So Arvind will need to find other investors, and selling to other investors will likely take the business out of being a private issuer. They will need to find exemptions other than the private issuer exemptions. To raise this money, what options do they have? There are two other commonly used exemptions that an issuer can use to sell securities to investors who are not accredited investors and do not have a relationship with the company or its principals. These are the startup crowdfunding exemption and the offering memorandum exemption. When soliciting the public, the risk of information imbalance is greater. These exemptions address this by requiring the filing of additional disclosure to the public. For the startup crowdfunding exemption, this disclosure is the offering document. For the offering memorandum exemption, this disclosure is the offering memorandum. So, what is startup crowdfunding? Crowdfunding refers to raising small amounts of money from many people, usually over the internet. For a few years now, BC has a crowdfunding exemption for the sale of securities. This startup crowdfunding exemption allows an issuer to sell its securities to anyone, regardless of their wealth or relationship with the small business. In order to use the crowdfunding exemption, the small business needs to make an offering document available to the public through a funding portal. You may choose a funding portal that is exempt from registration, or one that is operated by a dealer registered with the BCSC. On the BCSC website, we provide a link to a national list of portals permitted to operate in BC. As mentioned on the previous slide, the business must provide the offering document to use a funding portal for the offering. The offering document is a legal document like a prospectus, but much shorter and less detailed. It would be easier for the small business to prepare without the involvement of legal counsel. The offering document must describe your business and management, including the relevant risks, and tell how your business will use the money it raises. You do not need to include audited financial statements with the offering document. Small businesses here in BC are able to distribute securities to anyone in Canada under this exemption. The limits under the rule allow a small business to raise up to $1.5 million in a 12-month period, for a purchaser to invest up to $2,500, or if the purchaser has obtained advice from a registered dealer that the investment is suitable, up to $10,000. So the startup crowdfunding exemption is definitely a possible alternative for Vike to raise more money. Remember Arvind's friend Derek? He can invest using the startup crowdfunding exemption, as can any others that Arvind doesn't have a relationship with. But the offering limits under the crowdfunding exemption might be too restrictive for Vike. Remember, they want $2.5 million for their next stage of development, since the maximum amount available in a 12-month period under this exemption is 1.5, it won't be enough for the company. There is another exemption that Arvin can use to raise money from a broader group of investors, the offering memorandum, or the OM exemption. Under BC's OM exemption, issuers can raise an unlimited amount of money from investors. To use this exemption, you will need to prepare an offering memorandum, or OM. This is a legal document like a prospectus. It requires key information about the business, the use of proceeds, and management information. It requires more information than the crowdfunding offering document, but still less detailed than a prospectus. Here, you will probably want to engage legal counsel when preparing an offering memorandum to at least review your offering memorandum for compliance with the rules. And you will need to retain an auditor because you must include audited financial statements in the OM. The OM exemption allows a small business to sell securities to anyone in BC as long as the purchaser receives a copy of the OM and signs a risk acknowledgement form. In BC, there's no limit to the amount of money an individual investor can invest in the small business, and there is no limit on how much the small business can raise in any 12-month period, and you don't have to use a portal for the offering. Unlike a prospectus, BCSC doesn't review OMs or crowdfunding offering documents before the small business uses them to raise capital. The small business is required to file them with us after the fact, and we generally do review them for compliance. So this is another option for VIKE to reach new investors who don't fit in the other exemptions. Again, the key difference between the OM and the startup crowdfunding is that in BC, there are no limits on the amount issuer can raise and no limits on the amount an investor can invest. You might have noticed that I said in BC many times while discussing the OM exemption. As we mentioned earlier, most of the security laws are harmonized across Canada. However, there are some key differences in connection with the offering memorandum exemption, particularly on how much purchasers are allowed to invest under the exemption in a 12-month period. We will not go into the specifics now, but if you're looking to raise money outside of BC using the OM exemption, you should talk to legal counsel or touch base with other regulators. Let's recall Arvin's circumstances. He needs to raise $2.5 million for their milestone. Who can he sell securities to? Let's do one last quick poll. Based on what you have heard today, as we go through the list, raise your hand if you think the answer is yes. We will start with wealthy individual. Does anybody here think, yep? Okay. What about the employee? Okay, we have 1, 2. Okay, so basically the question for each of these individuals is yes. But VIKE will need to be able to meet each of the conditions of the prospectus exemptions that they're going to try to raise money from. Once a company loses its private issuer status, it cannot regain that status except in limited circumstances. It's important to keep track of the number of security holders and ensure that you sell securities only to the group listed in the exemption to remain a private issuer. So you've raised money using one or more of the exemptions we've talked about. Maybe, like VIKE, you've used the OM or the crowdfunding exemptions and have expanded your investor base so you have more than 50 shareholders. What are the implications? Well, you're no longer a private issuer. Does that mean that you're now a public company or what we call a reporting issuer? Not quite. You may no longer be a private issuer, but you're still not a reporting issuer. In BC, only reporting issuers are required to provide annual and interim financial statements and other continuous disclosure to shareholders on an ongoing basis. Many issuers aren't private issuers but never become reporting issuers. Many issuers intend to become public companies in the future, but aren't ready for that step yet. Let's suppose you had a very successful startup crowdfunding campaign or OM offering. Be aware there are implications from having large numbers of shareholders, each holding only a small amount of shares. For example, BC corporate law imposes an obligation for an annual general meeting for audited financial statements. These requirements can be waived provided all shareholders unanimously consent in writing. Unanimous consent is going to be a lot easier to achieve with a small group of shareholders. There are costs with communicating with a large group of shareholders that require professional advice. Before we conclude, I want to highlight some key things to remember from today. 1, a security can be many different things and not just a share. 2, securities law apply to your small business. 3, there are a number of different prospectus exemptions that your small business may rely on to raise money. We have some printed guides here called Capital Raising for Small Businesses that you can take away if you want. And you could also scan the QR code up on the screen and open the PDF version. Thank you again for your time.
Well, thank you very much. A big round of applause for BC Securities. And thank you to everyone for attending this session. I hope it was valuable for you. I'm just going to wind up now very quickly. Some upcoming events for the Surrey Board of Trade. On Thursday, we are here again to host BC's new Transportation Minister. He's going to give an address on the state of BC transportation update. And next week, we have our Business in Surrey breakfast here at the Sheraton again. And then also next week, we are on the 4th, we will hear from BDC's chief economist at our 2025 economic forecast lunch. That's all happening here at the Sheraton. Yes, a very busy week next week, and I hope to see you all next week. Have a great business day. Once again, thank you very much for BC Securities for your support. Thank you.